Hi, I'm James Robinson, and this is my stock pick of the week. This week's stock pick is Intel, symbol INTC. Before we go any further with the information on Intel and why I think it's a stock you should be buying, some things I'd like you to think about. I'd like to suggest you follow me on Twitter. My handle is @robinsonstocks.com. The best reason to follow me there is that whenever I buy or sell a stock, I post it immediately on Twitter so that people will know what I've done and when I've done it. But it oftentimes takes me several days to get around to getting a video done and edited. So if you want real-time information, the way to find that is @RobinsonStocks. And you'll also find updates when new videos are posted, and I sometimes put articles or YouTube videos from other people that I find interesting there in case you're interested in that as well. Also, if you would, please subscribe and like. I know everybody says that on every YouTube channel. Also, if you like a video, just drop me a quick line letting me know where you're watching from. I have a map that I keep of where my followers are. Here you can see the latest version of it. And it's pretty cool that a guy in Phoenix, Arizona is getting followers and subscribers from all over the world like this. So the more places, the cooler it is for me, so I'd appreciate it. Also, I've got a goal to get to 1,000 YouTube subscribers. I've just passed about 275 subscribers as of today, I think. So it's growing. It's not growing as fast as I'd like, but that's kind of my chart as to where I am relative to my goal. So this is the first part of a 5-part series that I'll do on Intel. This time we're going to talk about an overview, which is really sort of the fundamental reasons why I like the company, the arguments for buying it, the elevator pitch, if you will. Then we'll do a video on the operations, which is how good a job the company does in delivering goods and services to their clients. We'll look at the balance sheet, look at dividends, and we'll look at the company's wealth creation, which is a measurement of how good a job management does in creating wealth for the shareholders. So I think that everybody probably is aware that Intel is a chip manufacturer, but that's sort of an oversimplification of what they do. They do design, manufacture, and sell essential technologies for the cloud, smart and connected devices worldwide. They also operate through a number of subsidiaries, DCG, IOTG, Mobileye, et cetera, et cetera. It offers platform products such as central processing units and chipsets and system on chips, and multi-chip packages, as well as non-platform or adjacent products comprising accelerators, boards and systems, connectivity products, and memory and storage products. So what I want you to understand here is they don't just make chips, they make sort of all of the products that service the chip industry. They also provide Internet of Things products, including high-performance compute solutions for targeted verticals and embedded applications, and computer vision, machine learning-based sensing data, localization, mapping, driving policy technology. So, again, these guys are in, basically, if there's a computer around a company, they're going to be involved in making it. And I could continue to read all these facts and things that they do, but and you're welcome to pause these and read it yourself. But the idea is that they're a $192 billion company who's intimately involved in the guts of computers. And that's what most people know. What most people don't realize is that half of the revenue now comes from PC-centric businesses and half comes from data-centric businesses. And we'll talk more about what that means in the operations. But effectively, 48% of the revenue comes from data-related businesses, not from PC-related businesses. And that's probably something most of you don't know. It's something I didn't know until I started doing the research on the company. Other things to think about with Intel is that in the last 5 years, between 2014 and 2019, the company returned just under $60 billion to the shareholders in the form of more than $25 billion in dividends and more than $33 billion in buybacks. So this company's management has done a spectacular job in returning wealth to the shareholders. Intel was founded in 1968, it's headquartered in Santa Clara, California. It has about 110,000 employees. Another thing that I'd like you to think about is that Intel's PE ratio, and we'll talk about that on the next slide, is about 9 times earnings. That is extraordinarily low for a tech company. Consider that they're a competitor with a company like NVIDIA, and their PE ratio is 85. So you're effectively getting Intel at 1/10 the size, 1/10 the PE ratio of NVIDIA. That's pretty compelling. Intel is a $190 billion company at 9 times earnings. NVIDIA is a $360 billion company at 85 times earnings. So I'll let you sort of do some thinking as to how reasonable or rational that sounds to you, that the valuation of both of those two companies, if both of those companies were to meet in the middle, you'd have a 400 or 500% return on your investment with Intel. So as is evidence, if you look on Twitter, I bought this company December 28th. So this data is based on that day. It's about the 30th now, so we're a couple of days later than that. The company's market cap is $192.9 billion. It has revenues of $78.1 billion. The profits last year were $21 billion. That gives you the 9.21 PE ratio we talked about. It has a yield of 2.8%, so that's about twice the yield for the S&P 500. And it has total debt of about $36 billion, which is dwarfed by the company's cash on hands, which we'll talk about in the balance sheet section of the company. But long story short, very, very solid company. Very, very, in my opinion, underpriced, especially when you look at the cap rates for the rest of the market in general, especially, and in addition to that, the cap rate for companies in its industry. So when I analyze a company, I look at the company and I grade it in 29 categories. 9 of those categories are operating issues, which is how good a job the company does in delivering goods and services to their customers. I grade companies on a grade of 1 to 4. I then look at the financials, which I have 10 categories of financial data, which really looks at how well the company is financed, how much risk they have, how much debt they have, interest costs, those kinds of things. And finally, I have 10 categories that look at the management, which is what kind of job the management is doing in delivering wealth to the shareholders and turning the operations and the finances into profits and how those profits make their way back to the ownership. So you're going to see that if you look at my scores for this company, if you 2.5, about a 2 is average, between 2 and 3 is average. Anything over 3 or above is above average. And this company's grade for operating, management, and financial are all significantly above average. The total GPA is a 3.21, which is 39th out of the 1,000 companies that I've looked at. This slide says 500, but it's actually 1,000. So I've looked at just under 1,000 companies, and so it's the 39th highest rated company, so in the top 4% of companies. So anytime you can have a company in the top 4% of companies and you can buy that company at 9 times earnings, it's got to be something that's pretty exciting. Another thing to think about with this company is that this company is spending $16 billion a year in R&D. Now, I don't typically like companies that spend a lot of money on R&D because in my mind, they have to continue to spend that money to stay ahead of the curve. But with a company like Intel, they're such a major player. They have so many patents, they have so many PhDs and experts working for them, and they have such a high budget. How can they not continue to stay ahead? How would you start a company today that could effectively compete with Intel? I don't know how you would do that. So those are sort of the reasons, a number of the reasons why I think this is a company that we should be looking at. I mean, if you consider this company just goes from 9 times earnings to 11 or 12 times earnings, which is still half of what the S&P 500 is, then you've got a 20 or 30% return on your investment. And while you're waiting for that to happen, you're going to get a 3% dividend. And while that's happening, the company's going to spend $16 billion on R&D. And in addition to that, the company's going to buy back stock. You just add all that up and you say, I just don't see how we can do anything but do very, very well in this stock. So I'm very bearish on Intel. I think it's a stock you should consider buying.